Cipla came out with a set of numbers. Umang Vohra, the MD and Global CEO at Cipla, joins us on the show right now. Umang, hi, morning. If you could firstly talk about the various markets, especially US and India, which has shown a bit of a muted growth this time.
So this quarter is no different than how we anticipated it. If you remember when we spoke to you in Q2, we said we are probably up for a muted Q3 as well. And so if you look at overall numbers, slightly over 4,000 crore. We're about 2% up. EBITDA is about 10% down, much like we anticipated. But I think having said that, we're now at a stage where I think the next set of quarters are going to bring us back to firm growth YOY. So we're looking okay, and hopefully the YOY growth story now will continue Q4 onwards for us. I think talking through key markets, India was flat, which is largely because of the large base of the previous year. We are a large acute business. And the acute business does respond a lot to stocking. So if you look at the chronic players and the acute players would have muted growth. We have the same in this quarter. And if you look at our rest of our businesses, South Africa private's gone aggressively strong, 3 times market. We do that every quarter. The US business started with 100 million at the beginning of the year. It's now at 118 million for this quarter. And we are living with a guidance of trying to take it closer to 125 before we exit. Emerging markets in the previous quarter had a bump up in terms of supplies made to certain countries which had sanction requirements around them. So that's kind of a little lower, but it's going to be back to its trajectory and normal run rate starting in Q4. So qualitatively, even though the numbers may be slightly lower than the previous quarter, we look at this quarter as a very strong momentum across our businesses.
Right. So for the US market, Cipla continues to see growth, would you say? And do you maintain that US sales exit rate of 125 million in Q4? And do you expect to continue to see growth despite a tough environment?
Yeah, so I think we face the same growth challenge. So yes, we are maintaining the exit rate of about 125. Now we could be a million here or a million there, but directionally that's where we're headed. And I think we find the same challenges like most of the others do in the US. It's just that our base is lower. So it allows us to grow a little faster than some of our other peer companies. But the market is tough. The pricing environment, according to me, is somewhere at the bottom, but I can't say that it's rebounding back. Right? So it's not a big rebound that we are seeing in the market. I know that there was a large competitor which kind of suggested that it's on the rebound. I'm not sure that I share that perspective. But I think we are I think we are positioning ourselves nicely for the US, and we'll soon have hopefully more launches to announce there.
Okay. Do you think the worst of pricing in the United States is behind? Have you seen a pickup?
So, the way I'd answer this question is that the cyclical pressure, maybe till about a year back, used to be 6%, 8%. I think we're in the 8 to 10 zone now. Now, that doesn't mean that the 10 is going to become 5 in the next quarter. It's not. I think it'll slowly begin to either stay this level or move back up. So we won't see aggravated pressure anymore. But, you could expect a 10% degrowth. And I think that's going to happen.
The India business growth was flat, which can... what's the outlook and the guidance on the India business for the coming years?
So I think we are growing off a very large base post GST, right? And I mentioned this earlier. The GST related stocking, unstocking has more effect on acute businesses, on businesses which are not so much chronic in nature. And we've seen that impact play out in our numbers this year. We've had some execution pockets which, frankly, as the quarter went by, we've been able to fix. So I'm hoping that Q4, and now remember, Q4 is a seasonal quarter for India. It's actually the lowest among all the quarters for us, not this year, but every year. But I'm hoping that Q4, Q1, we are back to year-on-year growth in India.
Now, South Africa saw muted growth in the private market. What went wrong there?
No, I don't believe that the growth in the private market is one. In fact, the numbers are reporting us at 11%, which is 3 times the growth that the private market is going through. So we are outgrowing the private market. Our overall growth in South Africa may have been that because of the tender issues that we had spoken about in the previous quarter.
What is the update on tender pricing issue, and how do you think it will continue?
Well, I think we're reaching the bottom of it. I think, every tender rebids, etc. On the CGA and the access business size, we're pretty much at the bottom of this entire thing. In fact, I think our entire CGA and access business got rebased. We used to have a business which was almost $170 million in size, and this year we're probably going to exit with a business of about 80 million. So we've rebased that business. The South Africa tender market may have a little bit of that pressure, but we're looking forward to how we can outgrow that through our private market and the Mirren acquisition.
Okay. Was it the impact of supply construct in Q3, and exactly how much of it would last in Q4 as well, according to you?
So I think by the end of Q4 it should have gone away completely. Things are already a lot better, they're lifting, and supplies are largely back. So which is why if I look at it, momentum in growth markets, supply coming back strongly, reaching the end of and rebasing of the CGA business, I think the quarters ahead make us look a little bit more optimistic.
Right. How will margins get an uplift as the US business picks up? As Cipla margins are lower than the industry average.
No, I think we've had the India business is relatively flat this quarter, right? So hopefully the margins will expand. I think starting Q1 of next year we will begin to see our margin surge happening, and Cipla will always be about 1% or so lower than industry. That's not, our business model doesn't allow us to stay at the same level that the rest of the industry stays. So whether it's 18 or 19, I think we're in the range. We were 18.5, I think, in the previous quarter, so we're on track.
Cipla has been investing in the US market via higher R&D spend. Do you expect more complex drug approval to pay off by CY19?
So we're seeing complex drugs, but a large chunk of our share expenditure now is on respiratory clinical trials. So we have one ongoing, we're going to start another one. We are likely to keep, as I mentioned earlier, our strategy is to keep the R&D spends at a level of about 7.5 to 8% max. And we'll manage our portfolio to do that, because I don't think we can afford more than the 8% rate.
Right. India was muted, and Q4 is expected to be muted as well. But for Cipla, what is the expectation of the growth in India on a longer term basis? And do you expect strong growth in the Indian markets anytime soon?
Yes, I do, because if you look at our growth in India, it's interesting. Our secondary sales growth is 12%. Our prescription growth is also somewhere around 12 to 14%. Our primaries are a lot lower. So when we went back to analyze what's happening, it is really the destocking we're seeing on account of our acute business largely. And now, our strategy is not to go push up stock in the channel to take care of this destocking, but it's really to live with it and say that, okay, now post GST, maybe there's a general trend to stocks becoming lower in the segment. And we'll push whatever levers we have, but I'm pretty confident that India is coming back to double-digit growth in Q4.
Okay, Umang, great to have you on the show. Thank you much for taking the time out and speaking with us about the earnings and the trajectory going forward.